Good morning, everyone. I'm Andrew, and I don't want to work anymore. And here on my channel, we trade the Nasdaq. And today is another great day. It's Tuesday, and I've been trading. What is it? It's the ICT first presented fair value gap, and I've developed a little strategy around it. And we have been forward testing that for about just over 2 weeks now and back testing it for quite a long time. This is my spreadsheet going back to November 11th. We do have some missing data between December 20th and February 9th because I can't get that info off of TradingView that far back on those contracts. But overall, we have 200 trades across 69 trading days, 126 wins, 74 losses, a 63% win-loss ratio, 6,657 points in profit. Average points per day is 96.5 and a 4.5 RR. Pretty good numbers. So we are about 20 seconds from market open. We don't have much of a opening day gap. So this is yesterday's closing price at 17,236. So we do not have much to speak of here. So I will remove that. But we got London overnight highs here at 17,419. We had London lows at 16,867. And what else we got? Here on the 5-minute chart on the right, we also have some relatively equal lows. Oh, yeah, these ones further back on Monday, I believe. Or is it Friday? Anyway, markets opened up here. We're going to mark our opening price, which is going to be right here. We're going to make that pink like we do every day. Hope everyone's having a great morning. It is 6:30 here on the West Coast, but 9:30 open in New York. And all we are waiting for is the first presented fair value gap. And that gap cannot be on the 9:30 candle. So this is what I like to see. I like to see it get lapped over immediately. And ICT came out yesterday with a new video on how to disqualify a fair value gap. And it was pretty interesting. I'm going to see if I can find the example because it was on... Ooh, it's on a 1-minute chart though. Let's see if we can get that far back. No, I can't. I can do it on TradingView, but we have movement here. We got to get ready to trade. Looks like we might reach up to take out these highs first and then turn back around. We do have a gap forming here. We are watching for this. I do not have a bias today, so we're just going to take the gaps as they come. And that's the model. So we'll get ready to trade here. Our stop loss goes 5 points below the initial gap or initial candle number 1, 202, which would make it 97. And we have to wait for this candle to close. I learned that the hard way. Okay, we are in. And we have a deep retracement already into the first fair value gap. So we're just waiting for basically the next fair value gap to enter another trade on. I'm on CMC markets. I've been having issues with this. So is my dad. He's been using CMC markets. And what was it? Monday we had issues with it. Friday we had issues with it. I did not have issues with it yesterday, but my dad said he did. So we're looking for a new platform. I am anyway. I've been trying to use the paper trading on TradingView, but it doesn't allow me, or I'm having issues putting more than one order on. So if you guys can throw me a comment in there. What's going on here? Yeah, not looking good right now. What's going on? Might be going lower today, guys. But I'd like to see us go lower after we sweep these highs. What else was ICT talking about? He was talking about the highs and lows between 8 and 9:30. So that would be somewhere about here and here. So looks like we swept that high there. According to him, we would now be looking to sweep the lows. I haven't forward tested, or I haven't checked this out in the back testing yet to see if it holds any weight. But if ICT says it, it's probably true. But, you know, what's the percentage of it panning out in a trade? I don't know yet. But my model, we have those numbers. I'm pretty happy with these. I feel like we're in a discount and we should be going higher before breaking lower if we want to break lower. What else can we look at? Let's look at a 1 hour chart. Yeah, I feel like these equal highs here are prime targets to be taken out and start coming back up, maybe in the upper half of this range here. Man, that was a 147 point stop loss. We're just gonna add that on here. Minus 147. Not looking good right now, boys and girls. You know, dropping down into this area here with all these fair value gaps on the 5-minute. You know, dropping in there before going higher and taking out this high here. Here we go. So we're pushing up. Looks like we're gonna take these highs out. I can't put another order on, but I can move my stop loss up. To reduce my risk. Actually, I'm going to move it down a little bit. So there. Okay, so we swept this high. We would need a fair value gap on this candle to be able to put that stop loss here, which would be above our initial position. And that way we can move the stop loss on position 1 to break even. And I'm just going to do that now, because we're going to get ready to put another order on. Going long, this stop loss now will go here. And we are really taking off. Okay. So we got 2 positions on, 1 in profit, 1 has risk. And the risk on that second position is 169 points. Wow. And we're looking at this gap here. I don't want to see a close below this. If I do, I think I'm going to flatten the trade. We can tap in here, but we do not want to close beyond that. And we have another gap here. Okay, not looking good, folks. Yeah, if we close beyond this one, we're definitely in trouble. And I'll just flatten. Because now we're at a loss. We took all the profit out of the first position, but at least it's at break even. Okay. We got taken out. We will now go to the downside. And my stop loss is in the wrong position here. It's on the wrong candle. So this is our first presented fair value gap here. Really looking for a close beyond it. If not, we're on the wrong side. We just had a deep retracement into the initial move up. And we're just sitting inside this fair value gap here. So we're only allowed 2 losses. And I think we're going to get taken out here. And that'll be the end of the day. But my stop loss is in the wrong spot. It needs to be here, which is even more risk. But that's where it's supposed to be according to the model, which is an even larger loss at 147 points. Well, it's the same as the first one. We will see. Do we treat both of these as one? Doesn't look good, folks. You fucking piece of shit. I can swear on this channel, right? It's my channel. I'm going to draw a fib over here on this wick. Just so we can see the 50%. Oh, which is right at my stop loss. So that's fun. Yeah, that's it, folks. Rough morning. We had our first presented fair value gap. And we entered on it. We retraced pretty deeply and then went up. We took out the highs overnight in London. And then retraced deeper again into the second fair value gap. And then we inverted a whole bunch of them. And then bounced off of that first one, and who knows, maybe my stop loss was just a little cheap here at the 50% mark of, or as ICT would say, the consequent encroachment of this long 5-minute candle wick. I could just like tapped into that 5-minute or the 50% just above it. Bouncing off of it right now again. Anyway, that wraps up this morning. That's 2 days of losses in a row. But that's what you're going to get when you know, have a mega sized winning day. So we got 202 trades. 70 trading days, 126 wins, 76 losses, 62.4% win-loss ratio, 63 points in profit, 90 points per day, 4.5 R is our average. And yeah, that's it, guys. Hope you guys have a good one. We'll catch you tomorrow.